Welcome back to my channel, guys. Big up to the NSL gym. So in this video we're going to be differentiating between the bottoms up analysis and the top down analysis so that we can see which one is easier. I'm going to first use the bottoms up analysis. Most of you do this. All right, you do this. So you go to your 1 minute time frame and then you zoom in and then you start drawing stupid trend line like this, and then after that you will find somehow you will see a buy, and then you enter a buy, and then some seconds it will go in profit of like 5 cents, and then you close, and then you decide to go full margin on it, and then you blow your account. Don't do that. Here's what you do: zoom out completely, the last level of zoom, and then draw trend lines like this. Just use the wicks only. So this is the bottoms up analysis. Just use the wicks. So when you see something like this, you already know that at the end of the day we're going to get a buy, right? But you don't know when to enter, right? So you go to the 5 minutes time frame so that you can identify the type of the trade more, so that you can see things more clearly. Now that you can see it's some sort of flag, right? It's facing downwards, which means it has to go up. All right, but there's a funny trick here which most of us blow our accounts, or we like to be stuck there because we don't really understand what to do when we get to this point. Because yes, you are right, it's a flag and it's gonna go up, but you will still blow because you have missed another important thing. So you go to the higher time frame as well to always check. So there is something you need to know here, the secret, right? You see where I'm putting the shadows on area there? So that's the area of liquidity grabs. So which means when you go full margin on a buy here, the price will go down to test that area. If it's strong, the area is very strong, so the price will not be able to break that area. It will come back up and then close inside the trend line with a wick. So this is what you do. Let's say I have a $10 account here, so I want to enter them. So when I enter with my lot here, I measure my SL. So I've seen a minus $3, so from $10 I know the account can hold. And then my TP, when it goes down up there, when I measure it, I'll get $8. So which means this is a risk reward ratio, which is very important, because if you go full margin here, it will just go down. You can look the wick next to the green one, which is forming that it is an inverted hammer, which means it's gonna go some sort of reverse, but it is not that strong, but at least it will blow your account. So you need to really look at that before you decide to do anything. This is what makes your trade more successful, because you would have measured the amount of floating loss you could be carrying before taking the trade. So which means you will not keep checking the trade after every 1 minute, like you 1 minute scalpers, the boom and crash traders. I know you are there, the boom and crash traders. I know you are there. And you do this a lot, but don't worry, you will not prosper if you keep doing this. So you need to change. You need to trade like this. All right, you need to follow what I'm telling you right now. So right there, it might even go, and it will make you feel like it's about to break the trend line going upwards, and then when you enter full margin, it goes down. That is what it does most of the time, and that is where it catches a lot of traders on. So be careful on that part, because that one will blow your accounts. So if you look to the left, we can see we have resistance, right? So it's like to the left here we have a lower low point. So the lower low point, it means the current price, when it came to that point, it pretended like it was about to break going upwards, and then it came back down. So after coming back down with the retest, after it finishes, well, it's gonna go up again. So this is the whole point of going to the higher time frames to check. All right, this is the whole point, that is it, to go up. All right, so that's how you do it. So let's go to the V25 here, and we're going to do a top down analysis. We have done a bottoms up, now we're going to do a top down. So we're starting from the top going downwards to see which one is the better, and I want you to comment which is the better one for you. But as for me, the bottoms up is the better one for me. Let's see what you also have in mind, which works for you. All right, so let's hear it. So in the D1 here, we start by drawing the trend lines like this. But when you draw something like this, you are not really sure what the trade is trying to prove here. We don't even know it's gonna go up, it's gonna go down. We don't know. All right, so we have to go down so that we can try to confirm, because it seems the higher time frame is a bit blurry. We can see that much. So when we go to the lower time frame here, we zoom in, we try to draw something like that. You don't draw on the immediate candles, you just zoom out just a little bit. You can see here. So when you join your wicks using the trend line, and then you draw your upper trend line, and then you draw your lower trend lines, and then you have something like this. But then you can see it's just a downtrend, but you really don't know the next step. You can buy here and it can start selling, or you can sell and it can start buying. You don't know that much. So if you don't know that much, it's better to move on and to find better ways, a better analysis. So we go down again. Here we have something. Let's try to figure it out. Well, we can see it by drawing the trends. You can see it by drawing the trends. So by putting our lower lows there, our bottom's trend line, and then our upper trend line, we have some sort of triangle, right? And the price, it seems it made a break going downwards, and then it came back up again. So it seems it's trying to go up since it failed to keep going down. So that we have something there, but we are not sure, but we have something to hold on to. So we draw more trend lines again, so that until we see what we're working up against. So here, so it seems it might go up there. If it doesn't, well, it drops, it keeps going downwards. All right, so we can even try to draw something. Right now we are not sure of this trade, we're just drawing trend lines, but to be sure we have to also do this as well. So by doing this, we have some clear definition of this trade, that it's a downtrend. All right, it's a downtrend. And then if you draw closer inside, we can see we have a flag. We have a flag which is going up. So at the end of the day, it might break going upwards and then comes down. It breaks up to hit the liquidity grab, so that it can hit the stop losses, and then it comes back down. At least that's what I know. That's what I know, that that's how it works. Anyway, so upon doing this, we still have we don't have a definite answer if it's a buy or sell, because at the end of the day, it can drop, it can also buy. But after drawing this, that is the only way in the M5 that I'm certain. This is what, let me delete the trend so that it gets less confusing. So upon drawing this is how I was able to tell what was about to go next. That is it was about to sell. This is what I could use of all the time frame I was doing. I was making in the M5 is only the time frame where I was able to determine the trade. So here I know that it's gonna sell up to the first TP, so we can sell, go all the way to the first TP. That's so far which I know about this trade, that is gonna sell up to the. So if you're using the other brokers which will hit you with this liquidity grab, you use the others which don't.